We're jumping straight into Rocket Lab today. Everyone is watching the price action, but the real story is the Neutron timeline and the defense pivot. I mean, you just have to look at this chart. It is absolutely wild. We saw this stock hit an all-time high of $99.60.
Just back in January of this year, 2026?
It went vertical.
Yeah.
Just absolute euphoria.
No.
And now here we are mid-February, and gravity has definitely kicked in. We've seen this pull back into the, $68 to $75 range.
That's a 30% haircut in just a few weeks.
It feels like the market woke up with a massive hangover. But, and this is the really key thing we need to dig into, even with this insane pullback, the stock is still up over 174% since the start of 2025.
Yeah, that context is everything.
So the question is simple. Is this the discount of a lifetime? Or is it the canary in the coal mine telling us the tank is empty?
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And before we get into the weeds, and trust me, we're going deep today, make sure you subscribe and hit the like button. You won't want to miss our next breakdown.
So our mission today is really to strip away the emotion. You see those red candles stacking up and the lizard brain just, takes over.
The panic instinct.
The panic instinct. But we need to look past the daily noise of this sector sell-off and really understand the mechanics of Rocket Lab's business. Because if you think they just shoot rockets into the sky,
You're way behind.
you are looking at a 2020 business model in 2026. They're becoming something way more complex, and that's where the massive upside and the terrifying risk is hiding.
Okay, let's start with the bull case. I mean, the numbers from Q3 2025 were just a monster. Why was Wall Street buying this thing hand over fist a few weeks ago? What did they see?
Well, the headline number is the revenue, $155.08 million.
Which is up 48% year over year. That's fast.
That's impressive growth for anyone, let alone a hardware company. But if you just look at that top line, you're missing the real story. The thing that got institutional money so excited, it's the margins.
Right. Because space hardware, I mean, margins are usually razor thin. You're bending metal, you're burning fuel. It's a grind.
Exactly. Legacy aerospace, they fight for, 12-15% margins? But look at Rocket Lab's gross profit. It nearly doubled to $140 million.
And the margins were record, 37%.
37%. That is tech software territory creeping into hardware. That fundamentally changes how you have to value this company.
So how are they pulling that off? You can't get 37% margins just by launching Electron rockets.
Yeah.
That feels like it's becoming commoditized, right?
You hit the nail on the head. The launch is flashy. It gets the YouTube views.
The magazine covers?
But the profit engine is the Space Systems division. This is where the real moat is. It's what we call end-to-end integration.
Okay, let's unpack that, because end-to-end can sound like corporate buzzword bingo.
Oh, it totally can.
So what does it actually look like for a customer who just wants to get, say, a sensor into orbit?
Okay, think about the old way. You're a startup. You want to monitor crop yields. You hire Company A for the satellite bus, Company B for the solar panels, Company C for the navigation.
And you just pray they all talk to each other.
It's a logistical nightmare. It's like trying to build a car by buying the engine from Ford, the tires from Michelin, the chassis from Toyota, and then trying to assemble it in your driveway.
And if it doesn't work, everyone points fingers.
Of course. Rocket Lab just changed the game. They say, look, we'll build the satellite, we make the reaction wheels, we make the solar panels, we write the software, and oh, by the way, we have the rocket to launch it.
So they're the IKEA of space, but they also own the delivery truck and the assembly crew.
That's a great way to put it. And it creates massive switching costs.
Because you're locked in.
You're locked into their ecosystem. You can't just easily switch to save 5%. And this is how they're different from SpaceX. SpaceX is the freight train moving bulk cargo. Rocket Lab is the premium courier service for small sats.
That distinction is huge. But there's another layer to this bull case that I think the retail crowd misses. The defense pivot.
This is the space prime thesis. This is where the big, stable money lives.
We're talking about that $816 million award from the U.S. Space Force. That's almost $1 billion. And then you have this HASTE program.
HASTE, Hypersonic Accelerator Suborbital Test Electron. It's a mouthful.
It is. Break it down for us. What are they actually doing? Because hypersonic sounds cool, but what does it mean for the balance sheet?
So there's a global race for hypersonic missiles. The U.S. military needs to test components for these things constantly. They need targets, test beds.
And Rocket Lab realized they could use their Electron rocket for that.
Exactly. They modify it, and instead of putting a satellite in orbit, they use it to fire test payloads at hypersonic speeds through the atmosphere. They turn a delivery truck into a high-speed wind tunnel.
A hypersonic wind tunnel. And why should investors care?
Because defense revenue is sticky. Commercial startups can run out of venture capital. The Department of Defense, the Pentagon always pays its bills, no matter what the S&P 500 is doing.
So it turns them from a pure speculative tech play into a defense contractor.
That's the goal. It stabilizes cash flow. It provides a floor for the entire business.
Speaking of floors, let's talk about the backlog.
Yeah.
Because revenue is what you did yesterday, backlog is what you're doing tomorrow.
And the backlog is the number that lets you sleep at night. It's sitting at over $1 billion, up 56% year over year.
$1 billion.
Yeah.
So even with the stock bouncing all over the place, they have a signed contract for $1 billion worth of work.
Exactly. It provides revenue visibility. That's the core of the bull case. High growth, expanding margins, a recession-proof defense safety net, and a massive backlog.
Okay, so that's the sunny side of the street. It sounds perfect, but if it were perfect, the stock wouldn't have just dropped $30. We have to be realistic. Let's look at the flip side, the bear case.
And there are significant risks, and they're all kind of converging at once.
The elephant in the room is Neutron, their big boy rocket. It's supposed to compete with the Falcon 9, but they hit a snag, a rupture in the Stage 1 tank during testing.
This is the single biggest risk factor for the company right now.
How bad is a tank rupture? I mean, SpaceX blows things up all the time. Elon Musk posts blooper reels of it. Why is the market freaking out over one tank cracking?
Context matters. SpaceX has the private capital to burn 5 starships if they want. Rocket Lab operates on a much tighter budget, and Neutron is absolutely critical for their future growth.
Electron has a ceiling.
A low ceiling on revenue per launch. To get those mega contracts, the Amazon Kuipers of the world, you need Neutron.
So a delay in Neutron isn't just a schedule slip, it's a revenue gap.
Precisely. Every day Neutron isn't flying is a day they're burning cash without that massive revenue stream. And a structural failure in a carbon composite tank is tricky. You can't just patch it.
And time is money. Which brings us to financial health. Because they're still setting piles of cash on fire, aren't they?
They are. They had a negative free cash flow of around $220 million over the last 12 months.
$220 million. That is a serious burn rate.
It is. But to be clear, they're burning it to build a massive new rocket and launch pad. This is a capital-intensive phase. Every dollar is going into R&D.
Which is fine if you trust the process. But when I see a tank rupture and a $250 million burn rate, I start wondering how much runway is left.
And that anxiety is compounded by the third pillar of the bear case, insider selling. This is the psychological blow.
This is what really rattled retail investors. Mid-January, right around the highs, the CFO sold, what, 1.36 million shares?
And a director sold about 12,500. It's always a tough headline.
Tough to digest is polite. If I'm a regular investor and I see the CFO dumping over 1 million shares, my first thought is, what does he know that I don't, is the top in.
It definitely hurts sentiment. Now, the disclaimer is that executives sell for lots of reasons. Taxes, houses, diversification.
But the timing, selling at the peak, right before a testing failure comes to light, it just smells bad.
It creates a narrative of doubt. It makes you question if leadership thinks the stock got ahead of itself. And you combine that with the broader sector volatility.
Right, the whole space neighborhood is having a rough time.
We saw AST Space Mobile raising capital, which spooked everyone. And then you have the constant shadow of a potential SpaceX IPO.
The fear that all the money will rotate out of plays like Rocket Lab and into King Kong of the sector.
Exactly. So you have a tug of war, record revenue, and $1 billion backlog on one side.
And on the other, cash burn, broken tanks, and the CFO selling shares.
Yeah.
It's a messy picture.
It is. But that mess is where the opportunity usually lives.
So what happens next? What are we looking at for the next 30 days? What are the catalysts?
The calendar is packed. The big one is earnings, February 26th. That's the main event.
And what's the scorecard? What do they need to say to turn this ship around?
2 things. First, another beat on revenue, show the growth isn't a fluke. But second, and more importantly, a concrete, honest update on the Neutron timeline.
No corporate speak.
None. If they say it was minor, we're still on track for 2026, the stock probably flies. But if they say this requires a redesign, we're pushed back to mid-2027.
Look out below, because that's another year of cash burn.
Precisely. Uncertainty is what kills stocks. We need a schedule.
There's also an operational catalyst around the same time, right? the Cassowary Vex mission.
Yes, that's a HASTE mission, the hypersonic test program for the Defense Innovation Unit,
Why is that one so important?
because it validates the defense pivot. A successful launch here shows the Pentagon that Rocket Lab is reliable, that the hardware works under intense conditions. It could calm a lot of nerves.
It's a proof-of-life launch, a reminder that they can still execute.
Exactly. And then you have the price levels, the technicals.
Where are we sitting?
Right on the 50-day moving average, around $73.74. That's the line in the sand. It's where the bulls usually make their stand.
But if it breaks?
The next major support, the 200-day average, is way down at 58.72. So we are standing on a ledge, waiting for that earnings call.
Okay, so let's synthesize this. Let's wrap this up with the final verdict. Here's the elevator pitch as I see it. You have a company growing at nearly 50% with a billion-dollar backlog. The market is panicking over a tank rupture and insider selling, yes. But Rocket Lab has real revenue and real defense contracts. They have a safety net.
That's the core distinction. You aren't betting on a science project, you're betting on a scaling business.
The whole thesis is about this transition from just a launch company to a space prime contractor. Basically the next Lockheed Martin for the new space age.
And if we zoom out, you have to accept that space is hard, it's expensive, things break. If you're in this sector, volatility is the price of admission.
It is not a savings account.
Far from it. The real bet is on their execution over the next 2 to 3 years, the Neutron era. If they get that rocket flying, the current valuation could look very, very cheap.
And here's a final thought to chew on. We talk about SpaceX and Rocket Lab as competitors, but history shows us industries rarely settle on just one winner. You get a big two or a big three. Boeing and Airbus, Coke and Pepsi.
Exactly. The U.S. government does not want a monopoly in space. They need redundancy. They don't want to rely solely on Elon Musk.
That geopolitical need for a solid number 2 player might be the biggest tailwind Rocket Lab has. The Pentagon needs them to succeed. That's a powerful friend to have. That's the lowdown on Rocket Lab. Keep your eyes on that February 26th date. It's going to be a volatile one. If you enjoyed this breakdown, make sure you subscribe and like the show. We'll see you next time on The Easy Money Show.